Have you ever looked at your paycheck and wondered where all your money went before it even hit your bank account? Maybe you calculated that you're earning $60,000 a year, but when you actually look at what lands in your account, it's barely $40,000. Or perhaps you've added up all the taxes you pay throughout the year and realized the number is so horrifying that you immediately tried to forget it. Yeah, welcome to the reality that most people avoid thinking about, because once you actually calculate how much of your life you spend working just to pay the government, it'll make you question everything about the system. My name is Roshan, and I spend way too much time analyzing exactly how much of your earnings disappear into government coffers before you ever see a penny. If you've ever wondered what percentage of your life is spent working for the government versus working for yourself, make sure to hit that subscribe button, because today we're breaking down every single tax that takes a bite out of your income, and I guarantee the final number is going to shock you. Let me start with the most obvious one that everyone knows about but probably underestimates: federal income tax. This is the big one that comes right out of your paycheck before you even see the money. Depending on your income level, you're paying anywhere from 10% to 37% of your income in federal income tax. If you're a single person earning $60,000 a year, you're in the 22% tax bracket, which sounds manageable until you realize that 22% of your working life is devoted to federal income taxes alone. But here's where people get confused and underestimate their real tax burden. That 22% bracket doesn't mean you pay 22% on all your income. The tax system is progressive, so you pay 10% on the first chunk of income, 12% on the next chunk, and 22% only on the income above a certain threshold. When you actually calculate your effective federal income tax rate, it might be closer to 12% or 15% of your total income. That still means you're working roughly 1.5 to 2 months out of every year just to pay federal income tax. Now let's add Social Security and Medicare taxes, which everyone calls FICA taxes. These are another 7.65% that comes straight out of your paycheck. Social Security tax is 6.2% on earnings up to a cap, and Medicare tax is 1.45% on all earnings with no cap. So right there, before we even get to state taxes or anything else, you're paying another 7.65% of your income. That's almost another month of work every year going to Social Security and Medicare. And here's something that makes this even worse. Your employer also pays 7.65% in FICA taxes on your behalf. Most people don't think about this, but economists agree that employer payroll taxes are actually paid by employees in the form of lower wages. If your employer wasn't paying 7.65% in taxes on your salary, they could afford to pay you 7.65% more. So the real cost of FICA taxes is actually double what shows up on your pay stub, around 15.3% of your total compensation. If you're self-employed, you feel this immediately because you pay both the employee and employer portions yourself. Self-employment tax is 15.3% right off the top before you even get to income tax. Self-employed people making $60,000 a year are paying over $9,000 in self-employment tax alone, and that's before federal and state income taxes. You're working almost 2 months of the year just for Social Security and Medicare taxes. Now let's talk about state income tax, which varies wildly depending on where you live, but can add another massive chunk to your tax burden. If you live in a state with no income tax, like Florida, Texas, or Washington, you dodge this one. Lucky you. But if you live in California, New York, or other high-tax states, you're paying another 5 to 13% of your income in state taxes. In California, if you're earning a decent income, you could easily be paying 9% or more in state income tax. That means if you're in California earning $70,000, you're paying roughly $6,000 or more in state income tax. That's almost a full month of work going to the state government. Add that to your federal income tax and FICA taxes, and you're already working 4 to 5 months out of every year just to pay income and payroll taxes. We're not even done yet. Sales tax is the next layer of taxation that people often forget to include in their calculations. Every time you buy something, you're paying sales tax. Depending on your state and local jurisdiction, this could be anywhere from 0% to 10% or more. The average American pays around 7 to 8% in sales tax on their purchases. Now, you might think this isn't that much, but let's do the math on what this actually costs you. If you earn $50,000 after income tax and payroll taxes, and you spend most of that money on taxable goods and services, you're paying an additional $3,000 to $4,000 in sales tax throughout the year. That's another month of work. Think about that. You already worked 5 months to pay income and payroll taxes, and now you're working another month to pay sales tax on the money you managed to keep. You're working half the year for the government before we even get to the hidden taxes. Property tax is another massive expense that homeowners pay, and it's basically rent you pay to the government for the privilege of owning property. The average effective property tax rate in America is around 1% to 2% of your home's value annually, but it varies widely by state and locality. In New Jersey, you might be paying 2.5% of your home's value every year. In Texas, it's over 1.6%. These numbers add up to thousands or tens of thousands of dollars per year. If you own a home worth $300,000 and your property tax rate is 1.5%, you're paying $4,500 per year in property taxes. For someone earning $60,000 a year, that's another 7.5% of their gross income going to property taxes. And here's the infuriating part about property taxes. You never actually own your home. Stop paying property taxes and the government will seize your house and sell it at auction. You're essentially renting from the government forever, even after you've paid off your mortgage. Let's talk about the hidden taxes that most people don't even realize they're paying. Gas tax is built into every gallon of fuel you buy. Federal gas tax is 18.4 cents per gallon, and state gas taxes add another 30 to 60 cents per gallon depending on where you live. If you drive a normal amount and buy 500 gallons of gas per year, you're paying roughly $250 in gas taxes annually. That might not sound like much, but it's another few days of work for the government. Sin taxes on alcohol, tobacco, and other products add another layer. Excise taxes on flights, hotel rooms, and various services take their cut. Phone bills include multiple taxes and fees. Utility bills have taxes. Vehicle registration fees are essentially taxes. Tolls on roads are taxes by another name. When you add up all these smaller taxes and fees that are embedded in the prices of everything you buy, it's easily another 2 to 3% of your income going to various government entities. Then there are the truly hidden taxes that you pay without even realizing it. Corporate income taxes and business taxes get passed on to consumers in the form of higher prices. When the government taxes businesses, those businesses don't just absorb the cost, they raise prices to maintain their profit margins. Economists estimate that you're paying an additional 3 to 5% in hidden taxes through higher prices caused by taxes on businesses. You're paying these taxes, but they're invisible because they're built into the price of everything you buy. Inflation is arguably the most insidious tax of all, and it's entirely caused by government policy. When the Federal Reserve prints money and expands the money supply, it devalues every dollar you've saved and earned. If inflation is running at 3% per year, the purchasing power of your money is declining by 3% annually. This is a hidden tax that disproportionately hurts savers and people on fixed incomes. You worked hard to earn that money, and the government is slowly making it worthless by printing more money. Over the past few years, inflation has been much higher than the official 2% target, running at 7%, 8%, even 9% in some periods. That means the government effectively took 7 to 9% of your wealth through inflation. You didn't see this as a line item on your tax return, but it's just as real as income tax. Your money buys less, which means you effectively earned less, all because of government monetary policy. Now let's add this all up and see how much of your life you're actually working for the government. Federal income tax takes about 12 to 15% of your income for a middle-class earner. FICA taxes take 7.65% that you see, plus another 7.65% hidden in employer-side taxes, for a total of about 15.3%. State income tax takes another 5 to 9% depending on your state. Sales tax consumes another 2 to 3% of your after-tax income. Property taxes take another 2 to 5% depending on whether you own a home. Gas taxes, excise taxes, and various fees add another 1 to 2%. Hidden taxes passed through corporate taxation add another 3 to 5%. Inflation tax takes another 3 to 8% depending on current inflation rates. When you add all of this up, the average American is paying somewhere between 40% and 50% of their income in total taxes, when you include all the visible and hidden taxes. Let me repeat that because it's staggering. Between 40% and 50% of everything you earn goes to the government in one form or another. That means you're working roughly 5 to 6 months out of every year just to pay taxes. From January through May or June, every dollar you earn goes to the government. You don't start working for yourself until summer. This is why Tax Freedom Day, the day when Americans have theoretically earned enough to pay their total tax bill for the year, falls in late April or early May for the average taxpayer. Almost half your year is spent working for the government. Think about what this means for your life. If you work a typical 40-year career from age 25 to 65, you're spending 16 to 20 years of your life working solely to pay taxes. 2 decades of your life handed over to the government. And here's what makes this even more infuriating. Wealthy people with sophisticated tax planning often pay lower effective tax rates than middle-class workers. They structure their income as capital gains instead of wages, use tax deductions and loopholes, shelter money in offshore accounts, and employ teams of accountants to minimize their tax burden. Meanwhile, you're a W-2 employee getting hit with the full tax burden before you even see your paycheck. Warren Buffett famously pointed out that his effective tax rate was lower than his secretary's tax rate. The truly wealthy pay 15 to 20% in taxes, while you're paying 40 to 50% when all taxes are included. The system is designed to extract maximum taxes from wage earners who can't avoid it, while allowing the wealthy to minimize their burden through legal tax strategies that regular people can't access. So, what can you actually do about this? First, understand that tax planning isn't just for the wealthy. You can maximize contributions to retirement accounts like 401ks and IRAs to reduce your taxable income. You can use health savings accounts to pay for medical expenses with pre-tax dollars. If you have any self-employment income, you can deduct business expenses. If you own a home, you can deduct mortgage interest and property taxes. These strategies won't eliminate your tax burden, but they can reduce it by thousands of dollars per year. Second, consider where you live. Moving from a high-tax state to a no-income tax state can save you 5 to 10% of your income annually. That's an instant raise just from changing your location. If you're paying 9% California income tax and you move to Texas or Florida with no state income tax, you just gave yourself a 9% raise without changing your job or salary. Third, educate yourself about how the tax system actually works. Most people have no idea how much they're really paying in taxes because the taxes are hidden, spread out, and deducted automatically. Once you see the full picture of your tax burden, you can make informed decisions about how to structure your income and expenses to minimize what you pay. So there you have it. When you add up federal income tax, FICA taxes, state income tax, sales tax, property tax, gas tax, hidden corporate taxes, and inflation, the average American is working 5 to 6 months out of every year just to pay the government. That's 40 to 50% of your life spent working for taxes. You're not imagining that your paycheck doesn't stretch as far as it should. Half of it is gone before you can even think about saving, investing, or enjoying your money. If this made you realize just how much of your life is devoted to funding the government, make sure to subscribe because we need to talk about legal strategies to keep more of what you earn.